Namaskara people, this is Tejaswini Gowda, and in today's class we will be looking forward to the basics of accounting. Basics of accounting, we know it is the debit and the credit, and that is what we are going to study, and what are the approaches that can be looked forward into. That is what we are going to study in this particular classes. Yes. So now this class mandatorily need to be watched before watching any other concepts or any other thing, because mean to say it gives a much more clear idea or a clear understanding with respect to what we are studying. So this class is very simple. This is going to be the basics of accounting, and that basics of accounting, we know what is the basics of accounting, right? Whenever we hear the word basic, so we mean to say it is the debit and credit. We all know what is debit and what is credit. We say some need to be debited and some need to be credited, but we exactly don't know why we are debiting and why we are crediting. So let's try to understand why. The aspect of why debit and why credit using an approach in accounting, and that is we have in the approach we have two approach. That is, the first approach is the traditional approach. The first approach is the traditional approach, and the second approach is the modern approach. Second approach is the modern approach. And these two has, normally we have debits and credits for this, and we have debits and credits for this. Both we have debits and credit, but we exactly need to understand why we are debiting and why we are crediting. Then we need to follow either of the approach. Either of the approach gives you the same answer, same debit and same credit, but why is the reason that makes it different. So now let's try to understand the first one, that is the traditional approach. Let's try to understand the first one, that is the traditional approach. Easy as of now. So now, as of now, it's easy. In traditional approach, how are we classifying the accounts? The classification of the account is what we will be understanding in traditional approach. See, we know expenses that will be debited or that will be credited based on these situations. Expenses will be debited and this income will be credited. Yes, fine. But what makes it debit and what makes it credit is what we will be understanding in traditional approach. Very simple. And now let's try to understand the classification. Let's try to understand the classification of the same. What are we understanding? We are understanding the classification of accounts with respect to what? With respect to traditional approach. As of now, it's very clear. Fine, great. Now let's move forward. With respect to the classification, the first one is the personal accounts. With respect to the classification, the first one is the personal account, and the second one comes up with the impersonal accounts. And second one comes with the impersonal accounts. So now, what is personal account? The personal account is very simple, people. Personal account, it relates to people. So now, let's understand. I am a human being. You are a human being. We people are human being. Human being comes under personal account, and this personal account has a further classification. That is, the first one is the natural personal account. What is it? It's the natural personal accounts. Natural personal accounts, the word itself states that it is natural. Natural means we human beings, right? So human beings comes under where? Human beings comes under the natural personal accounts, and this natural personal accounts comes under where? Personal account. And this comes under where? This comes under personal account. Easy. As of now, easy. So now, great. Let's take another instance, that is personal account. Now we are very clear, human beings comes under where? Personal account. Very simple. Now next, company like Reliance, company like Adani. Example, all this company, can I say this company is acting in individual capacity? This company is artificial and it's happening and it's working, this business entities are working in individual capacity. So where all the artificial personal accounts, where all the artificial accounts comes under, like companies, banks, private limited or public limited, or the cooperative societies, or the clubs, or the government companies, anything for that matter will come under where people will come under personal accounts, will come under where personal accounts, and that will specifically come under where artificial, and that will personally specifically comes under where artificial personal accounts. And this artificial personal accounts, what all the companies, clubs, companies, everything comes under here, everything comes under here. As of now, easy, so great. So now let's move forward. And there is another classification which is provided under personal accounts, and that is representative, that is representative personal accounts. What is it? That is representative personal accounts. What does this representative personal account means? These are not in the name of any persons. These are neither persons, these are neither companies, but are still represented as personal accounts. What did I just say? Representative accounts are neither personal accounts, that is, they are neither any person nor any organization like artificial personal account, but still these are classified under personal accounts, still classified under personal accounts. So now the example for the same can be outstanding account, outstanding liability account, prepaid account, capital account, everything comes under where? Everything comes under the representative personal account. Ultimately it is classified under personal account. Ultimately it is classified under personal account. Easy as of now? As of now it's easy. So what are we studying? We are studying with respect to the traditional approach, classification part. Under that we study with respect to the personal account. Personal account, all the natural person, you, me, your friend, my friend, means to say human being. All those people are coming under where? Personal account. Second, artificial personal account. All the companies which you see, the IT companies, Infosys, the Reliance, every companies for that matter is coming under where? People is coming under artificial personal account, that is under the personal accounts. Next, representative personal account, these are neither the person nor the organization, but still these are classified under personal accounts. Example for the same, please tell out example for the same. Outstanding account, prepaid account, capital account, drawings account, everything comes under personal account. As of now, easy, great, fantastic. Now let's try to understand this impersonal accounts. Let's try to understand this impersonal accounts. See, personal means we are done with it, personal account. See, impersonal accounts, these has a classification, this has two classification, that is real account and nominal account. What is it? That is real account and nominal account. This real account, what is classified under this real account? Very simple. All the assets of the firm, are classified under where? People are classified under real account. All the assets of the firm are classified under real account. But be careful, debts are not classified under real account. Debts are not classified. Only assets of the firm are classified under real account. Only assets. Example for the same, can I say the fixed deposits which you are keeping? The fixed deposit which you are keeping in the bank, the investments which you are making, the fixed assets which you have, all those are classified under where? These are the examples. All those are classified under where? Real accounts. Be careful, assets of the firm are classified under real account, not the debts, only assets. Great. So now let's move forward. Let's move forward to nominal account. See, we have classified assets, we have seen real account. Now let's come into our two major aspects, that is expense and income. So now what is provided under nominal account is what you are going to classify, how you are going to classify. What you are going to classify is your expenses, your income, your loss, your gains. Everything will be provided where? Everything will be provided under your nominal account. What did I just say? All the expense, all the incomes, all the gains, all the revenues, everything will be provided where? Will be provided under your nominal account. Great. Example for the same. can I say? Expenses will be provided, income will be provided, gains will be provided, and losses will be specified over here. Everything will come under where? Come under your nominal account. Easy. So now, let's take in few example. Example, the salary account. Can I say the salary will be, salary account is your expenses. Salary account is provided. Any interest paid, any commission received, any interest paid, any commission received for that matter, commission received or commission paid, interest received or interest paid will be provided where? People will be provided under your nominal account, will be provided under your nominal account. So as of now it's easy. Great. So now, with respect to this, we have seen what are you going to classify, what are you going to classify under each head, that we have seen what is done. So now let's try to understand how we are going to do this thing. How we are going to do this thing? We are going to do this by applying something called as golden rules of accounting. Applying something called as golden rules of accounting. We are applying this how? We are applying this by this, that is golden rules of accounting. What is the golden rules of accounting? For personal account, this is the universal rule. This is the rules. Please remember this as rules. Even if you sleep, even if you eat, just remember the golden rules of accounting. Personal account, what are you going to do? What are you going to debit? What are you going to credit? This is how. Even if someone comes and wakes you up at 2 a.m. in the morning, even at that point of time, you should be able to tell, okay, golden rules of accounting, personal account this, real account this, nominal account this. That is the level of understanding, that is the level of this rules that you should be having in your brains. So now let's move on. For personal accounts, for this personal accounts, debit the receiver, credit the giver. What did I say? The golden rules of accounting under personal account, debit the receiver, credit the giver. Very simple, people. Debit whatever you are going to, that is who is going to receive, debit it. Who is going to give it? Just credit it. Golden rules of accounting under personal account, repeat after me. Debit the receiver, credit the giver. Debit the receiver, credit the giver. Now, let's move forward to the second one. Real account. Debit what comes in, debit what comes in, credit what goes out. Debit what comes in, credit what goes out. What did I just say? Real account rules. Repeat after me. Real account rules. Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. Great. So now, nominal account rules. Nominal account rules. Debit all expenses and loss. Debit all expenses and loss. Credit all incomes and gains. Credit all incomes and gains. What did I just say, people? Debit all expenses and loss, credit all incomes and gains. Debit all expenses and loss, credit all incomes and gains. So now, everyone, repeat, everyone repeat. Golden rules of accounting. What is the golden rules of accounting for real account? Debit what comes in, credit what goes out. For personal account, debit the receiver, credit the giver. Nominal account, debit all expenses and loss, credit all incomes and gains. Okay. Now, as of now, it's very simple. What are we studying? We are studying a quick revision. What are we studying? We are studying with respect to the approaches for accounting. That is classification of accounts. In that classification accounts, we have seen two. That is personal account, impersonal account. All the people, all the human beings are classified under where? Personal account. Artificial person like Reliance Company, Infosys Limited, etc. are classified under where? Real account. Sorry, personal account. And what? Which are not in the name of the person or the organization but are represented as personal account are classified under where? Are classified under personal account. In impersonal account, what did we see? In impersonal account, we saw about the real account, that is all the assets of the firm are recorded over here. And in nominal account, all the expenses, incomes, gain, losses are recorded in nominal account. We have seen, we have given a few examples for the same. Now, everyone, golden rules of accounting. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and loss, credit all incomes and gains. Easy as of now? Easy? Digestible? Great, fantastic. Now let's move forward for the second one. That is the modern classification. That is, first thing we have seen, right? First thing we have seen with respect to the traditional approach, done, dusted. You guys are fantastic, done and dusted. So now, modern classification of accounts. Modern classification of accounts. So with this modern classification of accounts, we have 6 types of accounts. We have 6 types of accounts. That is asset. Be very careful. Stay with me. Assets, liabilities, capital, revenue, expenditure, and withdrawal. I can also specify this as drawings account. Easier. Drawings. Now, what does this modern classification of accounts say? This modern classification of accounts says that if example, let's take an example. This is the balance sheet. I am putting the T-shaped balance sheet for the easier understanding. That's it. For easier understanding. So now, with respect to this, if an asset is provided in the balance sheet, if an asset is provided in the balance sheet, as per the modern classification of accounts, it means to say if an asset is provided, means to say asset is provided for 10 lakh. It means to say this asset which is specified over here is having what balance? Is having debit balance only. Is having debit balance only. Means to say this modern classification of accounts says that asset always has what balance? Normally, if you see an asset in the balance sheet, normally as per the modern classification of accounts, has what balance? Has debit balance. There is no questions to it. It has debit balance. That's it. Done and dusted. That's it. It has debit balance only. Debit balance. So now, similarly, if a liability is been provided in the balance sheet, what does it represent? It is having credit balance only. It is having what balance? It is having credit balance only. So, can I say the normal balance as per the modern classification of accounts for asset is debit balance. It's debit, that's it. For liabilities, it is having credit. For capital, it is having credit. For revenue, it is having credit. For expenditure, it always has debit balance, debit. And for withdrawal, it has debit. It has debit. Slowly. Modern classification of accounts. With the modern classification of accounts, the normal balance for an asset is debit. Normal balance for liability is credit. Normal balance for capital is credit. Normal balance for revenue is credit. Normal balance for expenses is debit. Normal balance for withdrawal or drawings is debit. Done? Easy as of now? Great. Now, let's try to put little complications with this respect so that we'll understand things better. Great. Now, this is the normal balance. We are all pro with it. We are all like super pro with the balances which you have. Now, everyone, repeat after me. I'll ask questions. You guys try to tell the answer. Revenue has what balance? Credit balance. Liability has what balance? Credit balance. Asset has what balance? Debit balance. Expenses has what balance? Debit balance. Capital has what balance? Credit balance. Drawings has what balance? Debit balance. Liability has what balance? Credit balance. So now we are all fine and okay with this. So now let's move forward. So as this is being specified, let's take this particular thing only. Asset. Let's catch this asset. Catch the neck of this asset. So now, asset, what has happened? The company, let's consider X Limited. X Limited company, what has done? You know, it already has a balance. It has a balance sheet. It has been existed from so many years. So let's consider this is the balance sheet for the financial year 21 and 22. What it has? It has the asset of almost like 10 lakh. Let's consider this is the asset. As on 31st March 2022, the company X Limited has an asset of 10 lakh rupees. Clear? Now, what happens in the financial year 2022-23, company brings or adds or makes an addition to the asset of worth 2 lakh rupees. Of worth 2 lakh. Of worth 2 lakh. What did I just say? company X Limited as on 31st March 2022, asset balance was 10 lakh. Let's consider the year it has liability of 10 lakh, so that will match the balance sheet. Okay, it has an asset of 10 lakh. So now what has happened? In the financial year 2022-23, it has added 2 lakh rupees of additions for the asset. 2 lakh rupees additions of asset, very clear. Now, if I ask you people, you guys will tell that the asset is 12 lakh rupees. Fine, yes, it's 12 lakh. You guys are awesome. It's 12 lakh rupees only. Now wait. Let's try to understand this 12 lakh, addition of 12 lakh in the accounting aspect. It has what balance, people? It has debit balance. Now, if an asset is provided over here, can I say it is having what balance? It is having debit balance only. It is having debit balance. So now, if you need to increase the value of the asset, you guys already know 10 lakh rupees is the opening balance. You have added 2 lakh and it's very simple. It should be 12 lakh. How are you going to specify this in accounting language? Let's try to understand. This 10 lakh has what balance? Debit. What is this sign? Plus. So now, if I need to make this as 12 lakh, can I say, and should I say this should be debited only in order to get this 12 lakh rupees? 10 lakh rupees is the opening balance. You are going to add this, and addition in respect of accounting for an asset is what you need to debit it only in order to put this 12 lakh rupees in your 2022-23 balance sheet. In order to specify this 12 lakh rupees, you need to add. How are you going to add that in your accounting language? Is that you are going to debit your asset and bring it to 12 lakh rupees, so that your balance is going to be debit 12 lakh rupees. Easy as of now, easy. So now, let's try to put in a different aspect. Instead of buying, what have you done? Instead of buying, you have sold it. Instead of buying, you have sold it. Selling is been done. When you are selling, can I say, when you are selling, instead of this 12 lakh, can I say, okay, you have made a purchase, let's keep it to 12 lakh. Now what you are doing, you are selling your asset, that is you are removing some asset of worth some 5 lakh rupees. 5 lakh asset you are removing. Let's not put in the depreciation and other aspects, it's just for the simplicity. 5 lakh rupees you are removing. So now can I say, if I need to remove the 5 lakh over here, in the mathematical term, I need to provide an subtraction sign. I need to provide a subtraction sign. Can I say this is the opposite of the addition sign? Very simple. So how much is it going to be? It's going to be 7 lakh. Easy. It's going to be 7 lakh. So now, this 7 lakh rupees which is provided over here, people, has what balance if I need to provide this in the balance sheet? Ultimately, it has what balance, people? It has debit balance only if it's provided in the balance sheet. If something is provided in the balance sheet, it should have debit balance only. Easy. If this 7 lakh rupees is having debit balance, so can I say this, when you're putting the opposite sign in math, can I say even here I need to provide the opposite one in order to match the transaction which has happened? In order to match the transaction which has happened. Can I say that? Yes. So what are we studying? We are studying the modern classification of accounts, and we have looked into the balances which has been provided, and in this balances we have seen when will I debit? We know debit is the balance. When are we debiting? When are we crediting? We are debiting your asset account when your additions are being made. We are crediting your asset account when the deletions are being made. Easy, people, easy as of now. Let's try to put the same additions and deletions in your journal entry. Let's try to put the same thing in your journal entry. If this thing is understood, you are pro with it. So try to understand the entry. So now what has happened? We have a balance sheet, simple balance sheet, cute balance sheet. Asset account, how much we have? We have 10 lakh. Easy. Some financial year 21-22. Let's keep it very simple. Asset account has 10 lakh. So now what has happened? 2020 to 23, you have made an additions. Asset additions has been made. Asset additions you have made of how much? You have made of 2 lakh. When you're putting the same thing in the journal entry, can I say 10 plus 2 lakh is equal to 12 lakh? This 10 lakh, it's already there in your balance sheet. So 10 lakh balance is reflecting. Easy. So now let's try to understand this addition which is made during the period of 2 lakh rupees. How are you going to make the additions? See, watch carefully. Asset account debit. Let's consider this 2 lakh you have made the payment. That is, you have made the instant payment, bank payment you have made. You have paid some 2 lakh rupees and you got the asset. So can I say asset account debit to bank account? So now let's try to understand the classification of the same people. Asset account is very simple. This is asset. Bank is what, people? Can I say bank is also an asset? Bank is what? Bank is also an asset. Now, what is happening with respect to this is one asset is increasing, one asset is reducing. When you are making the payment from your bank account to some different person, can I say your bank balance to the extent of whatever the amount you have paid is what you have paid is been reduced to that extent. It is reduced to that extent. So can I say asset account, whatever you are providing over here is debit. Asset has what balance? Debit. If you are increasing the asset, what is happening? You are debiting. So now what is happening with respect to your bank? Your bank is also an asset. You are making the payment. Your asset is reducing. Can I say this need to be credited? And what have I done? I have credited it only. I have credited it only. Easy. Easy as of now. I have credited it only. So now, with respect to this is what, when you are making an addition, this is how it is going to be reflected. Let's consider the deletion aspect now. That is, you are removing some asset. So with respect to this, can I say if this is your asset, this is your machinery X. If you are selling to some Y person, if you are selling it to Mr. Y, can I say you are making a bank transaction? You are not doing any credit transaction. You are just making the payment, and you are that person is providing you the money. You are just selling the asset with respect to the deletion. So now when deletion is happening, people, can I say this asset is being reduced? That is 12 lakh rupees was your asset. Out of it you are reducing 5 lakh. Out of 12 lakh you are reducing 5 lakh. Can I say now with your asset is 7 lakh. This 5 lakh rupees adjustments you should be providing it over here. 5 lakh rupees adjustment you should be providing it over here. So now people, now deletion with this aspect, deletion. Can I say your asset, whatever 5 lakh rupees you are selling, that need to be credited because that asset is no longer existing in your company. No longer existing in your company. So asset has what has happened to the asset? Asset has been reduced. So now there is an other thing which has been reflected, that is, can I say your bank balance to that extent of whatever sales you have made is been increased. So now what is bank? Bank is an asset. Asset, when it is increasing, what you are going to do? You are going to debit. Bank increasing, you have debited. Asset, that whatever asset this machinery X you are selling, that asset is being going out of your business. It's no longer existing. What are you going to do? You are reducing the asset, and that reduction is happening through the credit of 5 lakh. Easy as of now? Yes. So with this thing in instance, let's try to understand. What are we going to say? Like what am I trying to convey is very simple. See people, when there is an account, so when the account will be debited, when the account will be debited and when the account will be credited. Can I say for the asset, the account will be debited when Try to understand, recall and tell me. I'll give you some 10 seconds time. Try to recall and tell me what need to be debited and what need to be credited. People? Yes, I hope I had given some few seconds of time for the thinking aspect. Yes, great. So now, when are you going to debit it? You are going to debit it when? Asset you are going to debit. Can I say when there is an increase? Can I say when there is increase you are going to debit it? When are you going to credit your asset as per the modern classification? Can I say when there is reduction? When the asset is been reduced, you are going to credit it. When the asset is additions or increase is being made, can I say increase or addition is being made, can I say you are going to debit the same? You are going to debit the same. Easy as of now? Easy people? Now, great. So, similarly, with this similar instance, try to understand for the liabilities. Try to understand for the liabilities. Let's try to understand for the liability. So, now liabilities has what balance people? Liabilities has credit balance. Easy, fantastic. Now, liabilities has credit balance. So, now if the liabilities are having credit balance, so can I say if this is provided in the balance sheet like this, 10 lakh rupees is the liability is provided. So, can I say this liability if it's specified in the balance sheet, it is having what balance? It is having credit balance only. It's having credit balance only. Now, great. With this aspect, see. Now, look at the screen. Look at the screen, people. Yes. With respect to this, it has a normal balance of credit balance, and when there is an increase, now let's consider this X Limited has taken loan from some people, that is it has taken loan from HDFC Bank. Let's consider HDFC Bank has given loan. So, HDFC Bank has given loan to the extent of 3 lakh rupees. HDFC Bank has given loan to the extent of 3 lakh rupees. Now, so total 13 lakh, let's consider with the increase in amount, can I say the bank amount is coming in. So, here also there is an increase of 3 lakh, 13 lakh. Let's try to understand the in-depth understanding of this bank account, how it will be reflected in the further classes. Now, let's understand only the basics part. Now, fine. HDFC Bank, it's 3 lakh rupees. 3 lakh rupees, it's the HDFC Bank. So, totally you have 30 lakh. So, can I say this 3 lakh rupees, whatever the addition has been made, let's consider this addition has been made in the financial year 22-23. Let's consider this addition has been made in 2022 and 23, and this balance sheet was for financial year 2021 and 22. This is the addition which you have made. This is for the current year. Now, let's try to put the same thing in the entry. This 10 lakh rupees, whatever has been reflected in your balance sheet, can I say this is already having credit balance? I need not do anything with that respect. Whatever the addition which you are doing, whatever the additional loan which you are taking in this year, you have to pass an entry for the same. You have to understand how you are going to pass the entry. Let's understand. So, now, can I say liability has credit balance? So, if I'm increasing this 10 lakh to, if I'm increasing this 10 lakh to 13 lakh, can I say I'm adding over here, this 10 lakh has what balance? Credit balance. If I'm reflecting this 13 lakh rupees in the balance sheet, can I say this 3 lakh is something which I'm adding? And if I need to add, can I say I should put in the credit only, not the debit. I should put in the credit only in order to increase that particular balance. So, if I am reflecting the same thing over there in the entry, can I say it is to what? To liabilities account. So, who is giving? HDFC Bank is giving. Let's keep it very simple. Bank. Your bank balance, to that extent of whatever the amount which you are receiving as loan is being increased, right? So, understand people, this is your asset and this is your liability. This is your asset and this is your liability. Asset is being, as bank is an asset as debit balance, your asset is being increased. Your asset is being increased. So now can I say with this aspect your bank account is increasing, your asset is increasing, so you are going to debit the same to liabilities account. Your liability as credit balance, you are increasing your liability, so can I say it is credited. Credited. Similar fashion, when you are reducing or making the repayment of the loan, when you are making the repayment of the loan, can I say it is just going to be the reverse entry? That is, you are going to reduce you're making the repayment of some 4 lakh rupees. So can I say, if you are making the repayment, if you are going to make the repayment, can I say it's going to be what? 13 lakh, 4 lakh, it's going to be 9 lakh rupees. It's going to be 9 lakh rupees. So easy, people. When you're going to make the repayment, it's 4 lakh, it's the opposite sign. If it is the opposite sign, if it's a credit balance, can I say I need to put in the opposite, that is debit, in order to do the same. Let's try to put the same thing in the entry very fast. People, you guys tell me, repeat, tell. So now, can I say it is going to be the liabilities account debit to bank account. Liabilities account debit to bank account. Liabilities account debit to bank account. So now what are you doing? To that extent of 4 lakh rupees, right? To that extent of 4 lakh rupees, you are making the repayment. Bank is what? Bank is your asset. If your asset is reducing, what is happening now? Bank is an asset as debit balance. If it is reducing, you are going to take in the opposite, that is, you are going to credit. What have I done? I have credited. Your liabilities as credit balance, if you are reducing your liability, what are you going to do? You are going to debit the same. Right, people? You are going to debit the same. This is about your asset and liability. Try, I'll give you 10 more seconds time. Try to understand the same thing, similar fashion, for your revenue and your expense. Revenue and your expense. Try to understand how. I'll give you a hint. Revenue has what balance? Revenue has credit balance. Expenses has what balance? Expense has debit balance. Try to, I'll give you 10 seconds, 20 seconds time. Try to understand how this debit and credit, it's going to be affected in modern approach. What are you going to do when it is being increased? What are you going to do when it is decreased? What are you going to do when it is decreased? What are you going to do when it is decreased and increased? I'll give you 10 seconds time. Please think about it. So, with respect to the modern approach, that is revenue account and the expenses account, can I say, when there is an increase happening, when there is an increase with respect to revenue happening, can I say you need to do what? You need to credit it. You need to apply the similar thing like your asset and liability. Revenue has what balance? Liability. That's sorry. Revenue has what balance? Credit. Think like a liability. Think the approach is liability, but it's not liability. Yeah, revenues are separate, assets and liabilities are separate. Think the approach is similar to liability. See, when it is having credit balance, it is having credit balance. When you're increasing it, you're going to credit the same. When you're reducing it, you're going to debit the same. You're going to debit the same. Similar fashion with respect to the debit expenses. Think the approach similar to your asset. When it has been increasing, what you're doing? When it's been increasing, can I say you're doing it? Can I say if you're increasing, it is going to be debit? When you're reducing, can I say it is going to be credit? When you're reducing, it's going to be credit. Similar fashion, people, similar fashion. Understood? I hope everyone understood. So, with respect to the capital, also say capital and drawings. With respect to the capital and drawings, also it's a similar fashion. Capital has what balance, people? Capital has credit balance. Drawings has what balance, people? Drawing has debit balance. Easy. So now, with respect to the capital account, when you are going to debit and when you are going to credit, when you are going to debit and when you are going to credit. See now, let's having credit balance. Think similar to your liability. Similar, not same. Similar. Approach. Only approach, people. Have patience. Only approach. Okay, now great. With respect to the credit. So now can I say, if you're increasing, you need to credit, and if you're reducing your capital balance, you need to debit. For drawings, if you're increasing your drawings, you need to debit. If you're reducing your drawings, you need to credit. Similar fashion, people, similar fashion. This is with respect to your modern approach. This is with respect to your modern approach. People, this class, this particular session or this particular class is very important. Try to watch the class. If you have not understood once, try to watch it again. Because after moving forward with this class, if you're looking into the other concepts like sole proprietor or the other journal entries, it will be very simple. It will be very, very simple. So now, let's try to let's try to give a quick revision with respect to whatever we have seen. We have started this particular session or the classes with respect to the approaches. Major theme of this class is very simple: approach. That is a classification of account. You have two approaches: traditional approach and modern approach. In the traditional approach, we have seen with the personal account and impersonal account. Personal account and impersonal account. In the personal account, all the natural persons, me, you, human being, is coming under the personal account. Reliance Company, Adan Limited, Infosys Limited, everything is coming under personal account, and which are not in the nature of human beings or the companies also comes under the personal account. Example for the same is capital account, drawings account, prepaid account, outstanding account. So, in impersonal account, real account and nominal account, real account, all the assets you are going to put into the real account, but debt you are not going to record the same. Example for the same we have seen, nominal account, all the expense, income, gains and loss, everything you are going to put in the nominal account. So, what is the golden rules of accounting? Golden rules of accounting, personal account, very simple, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. A nominal account, debit all expenses and loss, credit all incomes and gains. In modern classification of accounts, people, it has 6 types of accounts. In this 6 types of account, what it is there? Asset has debit balance, liability has credit balance, capital has credit balance, expenses has debit balance, revenue has credit balance, and drawings has debit balance. Whenever there is an increase or reduction, increase or decrease, what are we going to see? What are we going to look into? When there is an increase in the asset, you are going to debit. When there is reduction in the asset or decrease in the asset, you are going to credit it. Liability, when there is an increase in the liability, you are going to credit. When there is decrease in the liability, you are going to debit. For the revenue, wherever there is an increase in revenue, you are going to credit. Decrease in revenue, you are going to debit. Expenses, wherever there is increase in expenses, you are going to debit. Decrease in expenses, you are going to credit. Capital account, increase in capital account credit, decrease in capital account debit. Drawings account, increase in drawings debit, decrease in drawings credit. So, this is the class with respect to the approaches, and this class, please try to understand and try to solve few sums with respect to understanding the concept and trying to apply the same. One question might be difficult, 2 questions might be difficult, but the third questions you will get used to it and you will get a proper grip. And this is the class about the approaches, classification of accounts. Thank you, people.